Hey fam, Uncle Doug here, dropping some big mortgage knowledge on you, especially if you're looking at jumbo loans. Because if you're using a regular, traditional 30-year amortizing jumbo loan, which is what the big banks want you to do, then you must really love your bank because you're getting it stuck to you pretty good. The big banks don't want you to know about the Home Select product. It's been around since 2005. There's never been a default to my knowledge, and we are the only correspondent bank that I'm aware of that has it. And this loan is a game changer. It is just a better designed mortgage than the 30-year amortizing loan, which was designed in the 1930s. It's pre-boomer level. It's not even okay boomer, it's beyond boomer. This is boomer's parents' stuff. This was designed just to simply help people buy houses after the Great Depression. It is loaded. The amortizing loan is loaded with profits for the bank all up front. So when you keep refinancing your house every 4 years, you just keep paying the banks all their profits up front. You barely dimple your principal. The Home Select product is a much, much better mousetrap. So I did some research today. Let's take a quick look at California in the Southern Cal market. That's where I was born and raised. And I do a lot of business and a lot of fishing down in San Diego, I might add. Let's look at real quick what the median price is. First of all, the market is pretty stable, but it is definitely a seller's market. We don't have enough supply down there. The average price points or median price points, 1.2 to 1.4. And there's obviously a lot of jumbo type loans in that area. Huntington Beach, 1.5 to 1.8. And again, strong seller's market. Prices are going to keep going up. We don't have enough supply. You look at LA proper, 1.4 to 1.6. Obviously, a lot more jumbo loans in there. Closer to equilibrium, but still a shortage of houses. And then Westlake Village, Thousand Oaks, California, that area. I just put in 91361, but 91360, 91320, 91362, all those zip codes, they're all going to work out the same. You're at $2 to $3 million bucks for the median home in Westlake Village proper. Thousand Oaks like 1.2 million. So most of these areas are going to probably be a jumbo type product or at least a high balance product. And my loan doesn't care. I will kick the living holy hell out of any amortizing loan if the client is qualified. And not all are going to qualify. But if they do, let's take a quick look. I can go 10% down on $2 million loan. So you could be up in the 2.3, 2.4 range, right? And stay close to that. We can go 30% down, and this is with one-time upfront MI, so it's not terrible. It's not going to break the bank. It's a one-time rolled into the loan, and you're done. We can use this loan for a refinance, a purchase, investment properties, owner-occ, second homes. So I built out a scenario. We're going to blast through this thing real quick. We're already in at 3.5 minutes. We're going to try and get you done here by 7 minutes. Here we go. $2 million purchase, 10% down, we're financing $1.8 million. We're comparing this to a 6.75% loan. Next page, I have to figure out how much net income, or income if you're self-employed, how much income is rolling through your personal checking account. This loan is very different. It's tied to an FDIC insured checking account. It is all about sheltering you from interest expense. Any payment you put into your account, any money that goes into your checking account, is always paying down principal first, sheltering you from tremendous amount of interest expense. Okay? So in this particular scenario, and everyone's different, so you have to talk to me, reach out to me. $45,000 is what we're assuming is going through the person's checking account in this particular case. And then we're going to say, okay, so if we've got, out of that $45K, you got roughly $14K going to the house payment, taxes, insurances, whatever. And then you've got the aggregate here between that 14 and this is your 45. And so we estimated that this person is saving about 30% of the net income. So 30% of this 45 is the 13.5. And then we just tell the algorithm to calculate. There's no salesmanship involved here, folks. This either works for you or it doesn't. So let's take a look. Does this work? In this particular case, yeah, holy crap. Look, does it work? You're going to pay off your house in 8.6 years instead of 30. At the end of that time, now keep in mind, Southern California is blasting as always. So a $2 million house in 8 years is worth what? 3 or 4 million bucks? Potentially, right? On top of that, you now have a $1.8 million line of credit, free and clear. So you are liquid, and you have a line of credit to $1.8 million. And look at this. You're only going to pay 100 payments instead of 360. So you're no longer living for your house. Your house now becomes basically a financial tool where we tie the liability to the asset, keeping you liquid. So we're focusing on safety, liquidity, and return, because your money sitting in a shitty checking account is getting paid nothing. When we do this, it's basically sheltering you from 6.75%. Your money's now working at equal levels to insurance tools and the stock market. And it's savings, it's not interest, so it's not taxable. Unbelievable, right? And look at this. I'm saving my client, in this particular case, $1.6 million in interest expense. You think I'm on the Christmas card list this year? You're damn right I'm on the Christmas card list this year. And you were worried about your 675. I always hear people going, well, what's the rate? And I'm going to shop around because, if I can get 675, maybe I can get 6.725 or 6.5. Yeah, how does 2.5% comparison loan effective APR sound? 2.5. I could spot you 4 points and still kick your butt, because this loan will work all the way up to almost 15%. And look how fast this thing pays down. You look at this amortization table. In just 2 years, the client has paid down $300,000, and that's all liquid. But that $300,000 is no longer being charged any interest. It is that powerful. In a 30-year amortizing loan, they've only paid down 40 grand. 3 years, nearly $500,000 they've paid down. And it's all liquid, which means they can stroke a check to go buy that car, go put that kid through school, go put the down payment on a vacation home or second home. Realtors love this product because their clients get liquid so quickly that clients realize that they can then go buy a second home or a vacation home or investment property. And they come back to the realtors to buy more real estate. Great for realtors. Insurance agents love this for their clients because you can literally decide how you want to handle your money. It's your money. You're treated like an adult. So if you only want to go interest only, you can make a $7,500 payment instead of the $11,000 payment you'd be doing on a 30-year amortizing loan. You can go no payment. So again, if we go back to here, and let's say you've been in this loan for a year, 2 years, whatever. Here, pick a number, 12. You have $135,000 equity on the line of credit. You could literally stop making payments on the loan, and the only thing that happens is your loan balance rises. You are nothing derogatory is put on your credit. You're fine. This is great for people that have gig economies, like self-employed people, where they'll get a big rip and then they don't make any money for a while. Realtors, actors and actresses, where they might have a show and they're making killer money, and then all of a sudden they don't have a show for a year, something like that. This loan is I call it the Swiss Army knife of loans. It just does everything better than a 30-year amortizing loan. Unless you are unproven, like if you have an unproven ability to save money and manage your finances, go with a 30-year amortizing loan, and I do those as well. But if you are glued together, if you have more money than a month, good credit, you have some reserves, this is the best mousetrap out there. For sure, hands down. Reach out to me. You can find me at gohomeselect.com or 805-231-1644. Uncle Doug, dropping knowledge, be the change you want to see in the world. Have yourself a phenomenal day. Let's talk.